Bitcoin has just shattered expectations, soaring above $123,000 for the first time in history. What does this new record mean for the cryptocurrency market and investors? Let's dive into the details. As we look to the future, the immediate question is whether Bitcoin can maintain its momentum above the previous breakout levels. Recent price surges have captivated both investors and analysts, raising hopes for a more stable crypto environment. With Congress engaged in deliberations during Crypto Week, the market's direction will heavily depend on the outcomes of these discussions. Lawmakers are considering various regulatory measures aimed at providing clarity to investors and institutions alike. If ETF inflows continue and legislators move towards establishing a clearer regulatory framework, we could witness a broader rally in the crypto market. This would not only benefit Bitcoin, but also altcoins and other digital assets, potentially attracting mainstream investment. However, if these inflows slow down or if legislative progress stalls, we may see a rapid return of volatility in the market, reminiscent of the tumultuous periods experienced in previous years. Analysts suggest that the next few days will be crucial in determining the sustainability of this rally. Investors should keep a close eye on indicators such as trading volumes and institutional participation rates, which could signal market confidence or apprehension. The implications of these developments extend beyond immediate price movements. They could reshape the entire landscape of cryptocurrency investment. A favorable regulatory environment could lead to increased adoption by traditional financial institutions, enhancing Bitcoin's legitimacy. Conversely, regulatory hurdles could stifle innovation and push investors toward more volatile assets. As we navigate this evolving landscape, investors must remain vigilant and adaptable. The outcome of Crypto Week could set the stage for the next chapter in cryptocurrency history, making it essential to monitor legislative progress closely. The coming days will be pivotal in shaping the future of digital currencies and their role in the global economy. The path to Bitcoin's recent surge can be attributed to a confluence of significant developments over the past several months. Notably, sustained demand for exchange-traded funds, or ETFs, has emerged as a crucial factor, reflecting a growing acceptance of cryptocurrencies among institutional investors. This trend signifies a shift from speculative trading to a more structured investment approach, appealing to a broader audience. Additionally, the recent legislative environment has played a pivotal role in shaping market dynamics. For years, uncertainty surrounding cryptocurrency regulations has acted as a barrier to institutional participation, stymieing potential growth. However, the current push for clearer regulations by U.S. lawmakers has rekindled interest and optimism in the market, as investors seek legitimacy and security in their ventures. This rally is further amplified by increasing corporate adoption of Bitcoin, with several companies integrating cryptocurrencies into their financial strategies and payment solutions. Historical parallels can be drawn from previous market cycles, where regulatory advancements have often coincided with price surges, highlighting the importance of a stable framework. The motivations of key players in this landscape stem from a desire for legitimacy and a clearer regulatory framework that would allow for greater investment in digital assets without the fear of regulatory backlash. Looking ahead, analysts suggest that if this momentum continues, we may witness a sustained upward trend in Bitcoin's price, driven by both retail and institutional investors. This could further solidify Bitcoin's position as a mainstream asset class. The potential for new regulations to simplify compliance and foster innovation in the cryptocurrency space may also attract more players, enhancing market liquidity and stability. As these developments unfold, the trajectory of Bitcoin will likely serve as a barometer for the broader acceptance of digital currencies in global finance. The implications of Bitcoin's new all-time high extend far beyond mere numbers. This record-breaking price reflects a significant shift in investor sentiment, demonstrating renewed confidence in the cryptocurrency market. As Bitcoin rises, it tends to lift the entire crypto market, encouraging confidence among investors and traders alike. The immediate consequence of this surge is the substantial inflow of ETF investments, which has historically indicated that large, price-sensitive buyers are actively participating in the market. This uptick in institutional interest is crucial as it suggests a growing recognition of Bitcoin as a legitimate asset class, moving beyond its early reputation as a speculative bubble. According to recent reports, institutional investors are increasingly viewing Bitcoin not just as a speculative asset, but as a viable investment option. This shift is further solidified by current regulatory discussions in Congress, where lawmakers are actively considering frameworks that could govern cryptocurrencies more effectively. The increasing dialogue around regulation is significant, as it reflects a maturation of the crypto market, moving it closer to mainstream acceptance. Enhanced regulatory clarity could alleviate uncertainty, making it easier for institutions to allocate capital to crypto assets without fear of sudden policy changes. The average person should care about this development because it signifies a potential paradigm shift in how cryptocurrencies are perceived. As Bitcoin gains traction as a legitimate investment vehicle, we may see broader acceptance of cryptocurrencies within traditional finance. This could lead to increased adoption among retail investors who may have previously been hesitant to enter the market due to concerns over volatility and regulatory ambiguity. Furthermore, as institutional investment grows, it could stabilize Bitcoin's price and reduce its notorious volatility, making it a more attractive option for everyday investors. Looking ahead, if lawmakers successfully implement clearer regulations, we can expect even more institutional participation in the crypto market. This could pave the way for innovative financial products that incorporate Bitcoin and other cryptocurrencies, enhancing their integration into the global economy. As confidence continues to build, the landscape of investment may fundamentally change, ushering in a new era where cryptocurrencies play a central role in financial portfolios worldwide. The next few months will be critical in determining how this evolving narrative unfolds. On June 7, 2026, Bitcoin achieved a historic milestone, breaking through the $123,000 barrier. This surge was reported by CNBC around 10 a.m. EDT, alongside other significant movements in the crypto market. Ether rose to approximately $3,000, while XRP saw a nearly 4% increase. This remarkable price action coincided with the commencement of Crypto Week on Capitol Hill, where the House of Representatives is set to debate several crucial crypto-related bills. The driving force behind this rally is attributed to strong exchange-traded fund (ETF) inflows, indicating sustained institutional interest in digital assets. Unlike previous rallies that relied heavily on leverage, this upward movement is backed by substantial buying from institutional investors. This is noteworthy as it reflects a growing confidence in the market's stability and future potential. The recent price movement comes at a pivotal moment for cryptocurrencies as regulatory scrutiny intensifies globally. Governments are increasingly recognizing the need to create frameworks that govern digital assets, which could either bolster or hinder market growth. The fact that Bitcoin's price surge aligns with legislative discussions suggests that regulatory clarity may be fostering a more favorable environment for investment. The implications of Bitcoin's record high extend beyond mere numbers. It may reshape the landscape of institutional investment. As Bitcoin continues to act as the price anchor for the entire cryptocurrency ecosystem, its new all-time high serves as a catalyst for broader market sentiment. Analysts predict that this could pull in additional demand for ETFs and treasury investments, further legitimizing cryptocurrencies as an asset class. Looking ahead, the combination of bullish market dynamics and potential regulatory advancements could lead to sustained growth in the crypto sector. Investors are keenly watching how the proposed bills will be received by lawmakers and the potential impact on market operations. If favorable regulations are enacted, the momentum could result in even higher price levels for Bitcoin and its counterparts. As lawmakers deliberate on these critical issues, the market's response may well set the tone for the future trajectory of cryptocurrencies, particularly as institutional engagement continues to deepen. With Bitcoin reaching unprecedented heights, what do you think will be the key factors influencing its future? Share your predictions in the comments, and don't forget to subscribe for more daily deep dives.